Hello traders and investors, welcome back to the Trend Trader channel. Today I want us to talk about one of people's favorite stocks. That stock is Thungela Resources. Last week we saw that Thungela has performed in an interesting manner. Another thing, we know that Thungela recently paid a dividend, so people were excited with the dividend. So today I want to talk about what I see on the chart. The question that I want to answer is, should I buy the dip on Thungela? So to answer that question, I am going to use technical analysis. From your side, you can use whatever kind of analysis that you may want to use to make an informed decision. Remember that there was a strike at Transnet, so now the employer and the trade union have agreed on wage. So we expect that thing to be a thing of the past, even though the other unions disagree. So now, should we continue to buy the dip on Thungela Resources? The reason why I'm asking that question, before the dividend announcement, Thungela was trading below 260 Rand per share, as you can see. Then we saw Thungela Resources at some point breaking above 260 Rand per share. The share price went up somewhere around 370, 380 Rand per share. And then when the stock started trading ex-dividend, meaning that the people that bought the stock from that day going forward were not going to be eligible to receive dividend. Then we saw the share price dropping by that much. The difference was about 60 Rand per share, and that's the dividend that the company paid. The weeks that followed, then there was a lot of volatility in the stock. As you can see in the ATR, the volatility, it kept on increasing. So the week before the last week, the stock came back to that 260 region there, just barely touching that region. We can see here there was a green candle on that week. Then the stock started to push up. But what I want to talk about is last week's performance. We saw that the stock continued to trade higher, and then the stock closed this week with above average buying volume. This tells us that there are buyers that are buying the stock. Probably those people, they took advantage of this dip. By the dip, I'm talking about, it was a breakout, and then it was a breakout retest. I'll leave a link to one of our YouTube videos where we talk about a breakout retest strategy. So now it's a question of, can we buy this dip? Obviously, if we have the funds and it is a setup that we want to trade, we can buy that dip. But the question is, am I buying that dip? At this moment, I'm not too quick to buy the dip. The general market, some general markets like the GSE Top 40 are not that strong. For that reason, I'm a bit skeptical to pull a trigger on some names. But I'm going to give you two scenarios in case you want to buy the dip. So let's say you missed the opportunity to buy at this bounce, and then you want to buy based on this candle, which was green, and then also with this above average volume there, you can see a nice accumulation of the stock. So if you buy based on this green close, then your stop supposed to be the low of this week or the low of this previous week, ideally just below 260 Rand per share. When you look at the price difference between 260 Rand per share and 314 Rand per share, it is a bit wide. You are going to have a wide stop loss. Remember, risk management is just as important as buying shares in the companies that you love. So based on risk to reward, the risk at this moment, it's a bit larger. As long as the ATR is trading at that higher level, or the ATR is at the higher level, then that tells us that the volatility is still high. There are huge price swings, as you can see. The distance between the low and the high, and also the opening and the closing prices compared to this region where the share price was trading in a tight range, then you can see that the ATR was a bit low. So what am I going to do? I'm not going to buy this dip at the moment. I will wait for Thungela to come and break above this level. Then if the share price closes above this level, hopefully it will do that with an above average volume. I'm looking for a green candle when that close happen. It is the same thing that happened here. This is where I bought Thungela. You can see that there were these green candles that followed after that breakout, and then that move was happening. So I will do the same thing. I will wait for the similar setup. if Thungela breaks above 308 rand per share with an above average volume, then I'll be buying Thungela. It's easy to do that. We have a video showing you guys how to set up orders on Easy Equities if you're using Easy Equities. Even if you're not using Easy Equities, you can just use a buy stop order. Remember, buy stop order is triggered if the share price is trading above a certain predetermined level. So in this case, we can set a buy stop order just somewhere around 381 rand per share or 382 rand per share. And then the purpose of that is that we want to have a stop loss maybe minus 10% from entry level. So that stop loss is going to be tighter than the stop loss that we can have here. Then obviously what we are aiming for, we're aiming for the share price to continue to trade higher there. Remember, in this channel, whenever we talk about trade setups, the most important thing is that we want asymmetric risk to reward, meaning that if we take a 1 rand risk, we need to make at least 2 rands or at least 3 rands on that setup. So if you look previously, comparing this setup, we had a buy stop order somewhere here of Thungela just above this level. The level at that time was around 280. Then we have a minus stop loss. As you can see, the share price, it went above 380 rand per share. You can see that the risk to reward that we had at that time was somewhere just one above greater than 2. So it was a risk that was worth taking. Whenever we think about risk, we want to ensure that we are taking just enough risk so that it is worthwhile to take that particular risk. So that is what I wanted to share with you today based on Thungela. We're just looking at the Thungela chart. Some people, especially the people that managed to put Thungela be around 270 rand per share, those people, they got a low risk entry. But if you missed that entry, now somewhere around 313 rand, then where you're going to set your stop loss, your risk can be too wide. Then what we are going to do, we are just going to wait for Thungela to come back above 380, break above this level with an above average volume. Then that will be our signal to buy more Thungela shares. If you are a Thungela investor that still have the shares, then as long as Thungela is trading above this 260, then you don't have a reason. The only time that you're gonna be worried about Thungela, if Thungela comes back and then it starts to trade below 260, because once it trades below 260, then it can possibly go to around 220. That is the alternative scenario. Whenever you're looking at the stock market, don't just look at the upside, also look at the potential negative scenarios so that you can plan how you're going to play those scenarios if they play out, because the goal of a trader or an investor is not just to make money on the stock market, but it is also to preserve your capital. And one of the ways that you can use to preserve your capital is by using a stop loss in your trading. That's it that I wanted to share with you today. If you found value in this video, please consider subscribing if you haven't subscribed. And please smash the like button. That really helps the YouTube channel with the YouTube algorithm. And feel free to just share this video with as many people as you can. If you have any comments, suggestions, please leave them in the comment section.